Welcome back to our daily market analysis. Wednesday, May 13th, 2026, was a day of stark contradictions in the U.S. markets. If you only looked at the economic data, you would expect a bloodbath. Inflation indicators came in significantly hotter than expected, sparking fears of a prolonged high-interest rate environment. However, if you looked at the stock indices, you saw something entirely different. Despite the inflation shock, the tech-heavy rally pushed the S&P 500 to another record high, closing up 0.6%. How did this happen? The answer lies in the overwhelming power of artificial intelligence and a highly strategic diplomatic move involving Nvidia CEO Jensen Huang. Today, we will unpack the alarming Producer Price Index PPI data, the changing leadership at the Federal Reserve, and why the market is betting that the U.S.-China summit will unlock massive revenue for the tech sector. Let's start with the economic reality check. The April Producer Price Index, PPI, surged by an astonishing 1.4% month-over-month. To put that in perspective, this is the largest monthly jump we have seen in 4 years. On an annualized basis, wholesale prices are up 6%, marking the steepest climb since the inflation peak of 2022. What is driving this? The primary culprit is energy. With crude oil prices hovering near the $100 per barrel mark, the cost of production has skyrocketed. But the danger isn't just at the pump. The ripple effects are spreading into other sectors of the economy, indicating broadening inflationary pressure. Clark Bellin from Bellwether Wealth noted that the $100 oil mark is directly translating into severe producer burdens. Jim Baird at Plant Moran Financial echoed this, stating that the PPI report solidifies the view that inflationary pressures are persistent, making it highly likely that the Federal Reserve will maintain its higher-for-longer stance. The Fed is certainly taking notice. Susan Collins, president of the Federal Reserve Bank of Boston, delivered a hawkish message today. She stated that if inflationary pressures do not cool down, the Fed might have to consider further interest rate hikes, completely shattering any lingering hopes for an early rate cut. Adding to the uncertainty, the U.S. Senate officially confirmed Kevin Hassett as the next chair of the Federal Reserve. This marks one of the most controversial shifts in central bank leadership in decades. The confirmation of Hassett, who served as an economic advisor under President Trump, raises critical questions about the future political independence of the Fed. Investors are watching closely to see how the new leadership will navigate this resurgence in inflation without derailing economic growth. With such alarming macroeconomic data, why did the S&P 500 hit a record high? The market effectively ignored the macro data and focused on micro-level catalysts, specifically in the semiconductor sector. The catalyst was the confirmation that Nvidia CEO Jensen Huang is accompanying President Trump on his economic delegation to Beijing. This is a monumental development. Investors are interpreting Huang's presence as a powerful signal that the U.S. may lift its heavy export restrictions on advanced AI semiconductors to China. President Trump has arrived in Beijing for a 2-day summit with President Xi Jinping. The main agenda is to pressure China into opening its markets further to U.S. companies, while maintaining the fragile trade truce. Ross Mayfield from Baird captured the market sentiment perfectly. Semiconductor stocks are now operating in their own universe. Investors believe the fundamental demand for AI is so incredibly robust that macroeconomic headwinds like $100 oil or high interest rates simply cannot derail their growth trajectory. In essence, the market believes that regaining access to the massive Chinese market will outweigh the costs of domestic inflation for these tech giants. To summarize, we are seeing a deeply bifurcated market. On one side, traditional sectors are struggling under the weight of 6% wholesale inflation and the threat of prolonged high interest rates. On the other side, the AI tech sector is surging on the promise of immense structural growth and potential geopolitical breakthroughs. As we move into Thursday, May 14th, the data flow will not stop. We have a packed economic calendar. At 8:30 a.m. Eastern Time, we will see the April Import Price Index, initial jobless claims, and, most importantly, the April Retail Sales Report. This retail data will show us exactly how the consumer is holding up against these rising prices. Later in the morning, we get March business inventories and the EIA Natural Gas Report. We will also hear from Fed officials Schmid and Hammack. The volatility is far from over. Keep your eyes on the data and the headlines out of Beijing. Thank you for joining me, and stay tuned for tomorrow's update.